Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's webinar on Checklist on Standards on Auditing organized by AASB of ICI. As we all are aware, this is the third part of this Checklist on Standards on Auditing. We have already covered 200 series and 300 series. Today, we are going to cover 500 series relating to the audit evidence, SA 500 relating to audit evidence, SA 501 relating to the audit evidence specific considerations, relating to initial statements, 520 analytical procedures, 530 audit sampling, 540 audit accounting estimates including fair value, 550 related parties, 560 subsequent events, 570 which is revised one, the going concern, and SA 550 written representations. And in order to tackle all these standards, we are having with us two learned speakers, CA Mohan Soni ji and CA Asta Gupta ji. So on behalf of AASB of ICI, I extend my warm welcome to both these speakers on this webinar organized by AASB of ICI. We are also having with us CA Lalit Agarwal ji, who is also going to tell us about the importance of this webinar, as well as he is going to moderate our today's webinar. So welcome to you, Lalit ji, on this program organized by AASB of ICI. So before we formally start, it is my proud privilege to share with all of you the brief profile of our today's learned speaker. Mohan Soni ji has professional experience of more than 25 years, including 17 years with the PwC. He's a founder partner of TAMS and Group LLP. He has rich experience in handling various clients, including listed entities under various gaps. He's also a certified ESG practitioner. So once again, Mohan ji, on behalf of AASB of ICI, I extend my warm welcome to you. We are having our today's another learned speaker, CA Asta Gupta ji. So I would like to share with you the brief profile of Madam Asta Gupta ji. Madam Asta Gupta ji is a partner at Delhi-based firm since last 2.5 years. So professional experience ranges across statutory audit, personal and corporate taxation, income tax assessment, and GST compliance advisory. As far as past work profile is concerned, she was senior consultant with the risk advisory team conducting internal audit and risk assessment projects catering to telecom sector for the last 3 years. She has she was also an audit executive with an in-house global internal audit team of French IT MNC for more than 2 years. She has convened technical sessions organized by Accounting Standard Board of Institute of Chartered Accountant of India on INDIAS, as well as various programs organized by Auditing and Assurance Standard Board of ICI. She's the member of organizing committee and joint editor at the Bharatiya Vitt Salahkar Samiti, a leading third rank of Indian finance professionals deliberated GST sessions as a role as a co-convener of Bharatiya Vitt Sansthan GST group. She's a member of editorial advisory panel of the Chartered Secretary and the official monthly journal of the Institute of Company Secretary. She is adjudged allocation competition of CA students organized by NIRC of Institute of Chartered Accountant of India, and she has won technical presentation across the country in National Conference for CA students organized by the Board of Studies of Institute of Chartered Accountant of India during her student days. So once again, on behalf of AASB of ICI, I extend my warm welcome to you on this AASB platform, madam. I also welcome all the participants of today's webinar. And before we formally hand over today's this webinar to our today's moderator, sir, I would like to introduce today's learned moderator also. So before we formally start, Lalit Agarwal is a fellow chartered accountant currently working as an associate director with one of the big four firms. In past, Lalit ji has also worked in countries like Netherlands and Qatar with big four practice. He has more than 10 years of auditing experience in various sectors like consumer markets, media and entertainment, automobile sector and other manufacturing sectors. He has led engagements with the exposure of local GAAP, IGAP, INDIAS, IFRS and Dutch GAAP. He has functioned as the audit manager of a large national stock exchange and Bombay Stock Exchange listed clients, as a major international automotive manufacturer and as several unlisted companies, private clients. He is involved in conducting training. These sessions served as a platform for sharing knowledge and enhancing collective expertise in the field of accounting and auditing. So on behalf of AASP, I also welcome Lalit Agarwal ji on this platform as well as the webinar organized by AASP of ICI. I also welcome all the participants of today's webinar. So before we start, I request Lalit about this importance of this webinar. We start this webinar. Over to Lalit Agarwal ji, please.
Thank you. Thank you very much, Anilji. A very warm welcome to all of you who managed to pull yourself out of your busy schedule and join today's webinar on Checklist on Standard on Auditing Part 3. Today, we have the privilege of hosting two eminent speakers, CA Mohan Soneji, who will be covering SA 500, SA 501, SA 505, SA 510, and SA 520. And then we have CA Asta Gupta coming and talk about SA 530, SA 540, SA 550, SA 560, SA 570, and SA 580. This webinar aims to provide you with the valuable insights and deeper understanding of these essential standards. The auditing checklist prepared by Auditing and Assurance Standard Board of ICI serves as a comprehensive guide that outlines the necessary steps and procedures to ensure a robust and reliable audit process. It acts as a reference tool for practitioners, adding to the consistent application of auditing standard and promoting uniformity in audit practice across the industry. This webinar will equip you with knowledge and insight necessary to navigate the auditing process successfully. So without further ado, let us begin our session. Can I quickly invite CA Mohan Soneji to enlighten us on the standards on auditing checklist? Over to you, CA Mohan Soneji. Sir, you are on mute.
Yeah, thank you, Anilji, for your kind introduction. And thank you, Laliji, for your valuable insight about the initiative taken by AASP. And really, I appreciate these are very good initiative taken by AASP. I also, good evening to everyone, including Asta ji, and we look forward for, interactive session today on these, continued sessions on enlightening about the checklist. So I present my presentation, just a second. Yeah, can you see my picture screen?
Not yet, sir.
Not yet?
Now it is fine, sir. Make it full screen, sir.
Just a second. Yeah.
Fine, sir.
Can you see it now?
Yes, sir. Yes, sir.
Great. So as discussed, I am covering SA 500 to 520, and these are the listed standards which we just heard from Laliji. So first of all, I would like to just give a reference of how the checklist to be used. So first of all, there is a cover sheet which includes the client name, work paper reference, period ended, prepared by and date, and also reviewed by manager, a partner. If manager is there, then manager need to also sign it, and a date stamp should be done. So this is the very important, considering the recent regulatory observations which are being highlighted in reports where lack of evidence of review and preparation by the audit team is missing. So I highly recommend to use this cover sheet along with the checklist. So first of all, I would discuss SA 500. So how this checklists also are very well designed, which include para reference number, then particulars, guidance about the standard, and then responses. So yeah, response, give yes and no or give comment wherever required. Also work paper reference. So these are the beautiful design checklists, and especially in case other than your top firms. So where the audit firms are not using any tool. So these are the very good checklists to follow to ensure compliance with the standard on auditing and to demonstrate that work has been performed as per planned. So first of all, para 6, just giving a reference, para 6, 8, and has the auditor design and perform audit procedure by considering risk assessment procedures, tests of controls, and substantive audit procedures. So here the audit team need to give the response yes, no, not applicable, and give the work paper reference where the work has been documented in the Excel file or somewhere else, and whether the auditor has obtained sufficient appropriate audit evidence to support auditor's opinion and report. So that also need to be documented here. So just for the sake of inconsistency, I am not repeating all these columns. I would just focus on particulars, and which will be having guidance and guidance of standard and checklist section in subsequent slides. So type of audit procedure to obtain sufficient audit evidence include inspections, observations, confirmations, recalculation, reperformance, analytical procedures. So these are the type of audit procedure which are typically all audits and should ensure while performing the audit, which we will discuss in subsequent slide about these type of procedures. So consistency in gathering audit evidence is very important, especially when audit evidence has been obtained, gathered from different sources. We need to corroborate between the information obtained, evidence obtained through accounting records, minutes of meetings, and management representation. So it is very important that all source of information we are getting, those are giving the same results for the consistency purpose. So type of audit procedure inspections where we decide to perform, examine records or document, whether internal, external, in paper form, electronic form, other media, or physical examination of an asset while performing inspection. So this is typically we do inspection on higher side of the audit. Then observation, auditor also need to look at the process or procedure being performed by others. For example, stock count being performed by the management. So where auditors need to observe that how the stock count procedure are being performed. The external confirmation, evidence obtained through external confirmation by obtaining direct written response from third parties, which give the highest level of audit evidence comfort to us. Recalculation has the auditor check the mathematical accuracy of documents or records, whether manually or electronically. So recalculation is very important when we are using some large Excel files prepared by clients. Reperformance, independently execution of procedures or control, where auditor decide to reperform audit procedures or controls which were operated by the company. In case of an analytical procedure, we need to evaluate the relationship between both financial and as well as non-financial data and identify the difference and investigate the difference. The region of differences should be identified why the difference is coming. Inquiry procedure is important, also play important role in the audit procedure, where we obtain information from knowledgeable person, including financial, non-financial, within the entity or outside entity. So those inquiry procedures we perform, and then in case we identify any procedure, any information which we were not aware of earlier, or where the new inquiry gave us the significant different information as compared to what we were aware of, then we need to modify our audit procedure or decide to perform additional audit procedure. Obtain written representation in case oral inquiries are performed, then we need to obtain a written representation from the client. Next is reliability of information. So reliability of information will be on higher side in case evidence is obtained from independent sources, or where the controls are effective or obtained directly by the auditors, and the evidence highest comfort is provided by reviewing the original documents. So by having these consideration in mind, we can achieve the highest reliability of the information. Another important is use of work of management experts, where client decide to use some experts, then we need to perform some extended audit procedures just not by relying on whatever the reports are provided by the management expert. So first of all, we need to ensure, we need to evaluate the competency and capabilities and objectivity of that experts, that that person meet the requirement of the subject matter which is under consideration. Then understanding what work has been assigned to him, and then appropriateness of the work done by expert is also need to be evaluated. Thereafter, we need to also evaluate the conclusion by management expert by evaluation of the expert's findings. So whatever reports he has given, conclusion he has given to us, we need to look at whether that makes sense. And what are, whatever significant assumptions are used by experts, we need to look at those assumptions, test them from the reasonability perspective. Another important part is we need to also see, test the source data used by expert. So whatever data is shared by the company to the expert to reach to their conclusion, we need to also verify that data and look at the accuracy and completeness of the data, that based on which the report has been prepared by the management expert. Another important is when we are looking at the management expert support the independence. So we need to discuss with the management as well as the expert that he is independent of the company. He is not having any relationship which may influence his decision making. Then also we need to see applicable safeguards are in place that will give the enhance the validity of the report. Also we need to see whether auditor is management expertise has expertise to evaluate or perform the work. That is also important because the competency should also match with the subject matter under discussion. Then we need to see objectivity and competence. How we can see that by seeing that whether work has been performed in accordance with the technical standards or professional or industry requirement. And important is the expert should be subject matter expert, and then expert is competent with respect to relevant accounting requirements. So by performing all these procedures, then only we can say that we can decide to conclude to place reliance on the management expert report or not. So management experts are typically, for example, like actuarial valuation or any opinion taken from any third party lawyer or any tax expert. So wherever management is providing such report, we need to look at those reports and perform these procedures to place our reliance on those reports. So another part of evidence testing is the target testing, where as an auditor we need to identify high value or key items or item over a certain amount, which we call target testing, and item to obtain information. So these criteria should be applied to place reliance on the target testing procedures. So where there is an inconsistency or doubt over reliability of audit evidence, then a modification in audit report may be called upon, or we may have to decide to perform additional procedure in case the audit evidence obtained from one source is inconsistent with another, or where the auditor has doubt over the reliability of information to be used as audit evidence. So we need to perform either additional procedures or we may have to modify our report. So this is all about SA 500. Now I move to next SA 501, where specific consideration for selected items. So this standard typically cover three aspects: existence and conditions of inventory, completeness of litigation and claims involving the entity, and then presentation and disclosure of segment reporting. So first we will cover inventory. So audit, as your auditor, this is very important year-end audit consideration, and which is very important to place reliance on the inventory valuation, which may be significant wherever it is significant to any entity. So we have to decide to attend inventory observation, which will be performed by client. So by looking at the management instructions or procedure the management has decided to perform and they have communicated to a respective team of their internal system, we have to observe the performance of management inventory count procedure. We also have to inspect the inventory and perform test count. Thereafter, we have to reconcile physical quantity with the inventory records to arrive at the conclusion on inventory. So in case inventory count is performed at different date, other than the financial date, financial statement date, then we have to perform the roll backward or roll forward procedures for changes in inventory between the count date and the date of financial statement. So in case inventory count is not practical, so we have to decide to perform, identify what are the good procedure or alternative procedure which we can perform in absence of observing physical count. Otherwise, we may have to issue a modified opinion in accordance with the SA 705. So where the inventory is under the custody of third party and the inventory is material, then we may decide to request confirmation from a third party for the condition and quantity of the inventory. And if it is not giving comfort, then we may also decide to perform inspection at different date or other procedure as appropriate in the circumstances. Next is litigation and claims. This is also very important procedure. So here auditor need to design and perform audit procedure to identify litigation and claims. So following procedure will give you comfort on the litigation and claims. One is that inquiry of management and where applicable other within the entity, including in-house legal counsel. We should also look at the minutes of meeting with those charged with governance. Then we need to look at the correspondence between the entity and the external legal counsel. And also we should look at review the legal expenses to ensure that completeness of expenses as well as the litigations. So auditor also may decide to perform direct communication with entities external counsel where risk of material misstatement is high in terms of litigation. And in case there is no, in case of any internal external prohibition, perform alternate audit procedure. So if there is a provision that we cannot communicate with the legal counsel, then we need to decide to perform, identify the alternate procedure, which can give a comfort on litigations. So we may have to decide to modify our opinion if both of the following situation exists, where either management refuse the auditors to give permission to communicate or meet the external counsel, legal counsel, or the legal counsel refuse to respond to us on the letters which we have sent to them or inquiry made by us. And if auditor is unable to obtain sufficient audit evidence by performing alternate audit procedures. So where like that, if we are not able to get any comfort through communications, or we are unable to perform alternate audit procedures, so we may have to decide to perform or modify our opinion in these situations. So we should also take written representation from the management or those charged with governance about the disclosure made in the financials and though whether all the cases or litigation have been properly disclosed to us. So next is segment. So we need to understand the method used by the management in determining the segment information, evaluate appropriateness of such method. We need to evaluate whether those methods are adequate, then testing of methods, and then perform analytical procedure in terms of segment wise and then comparing with the previous year, whether those are in sync, those are in aligned. If there is some variation, then we need to inquire what is the reason of those variations. So this about 501. Now we are on 505 external confirmations, which is very important, and considering the recent observations by in fraud situation or regulatory findings, it has become more or less very very high, focus area, that whether auditors are getting external confirmation directly or indirectly. So we'll cover in subsequent slide about SA 505 procedures. So first of all is that auditors should maintain control over external confirmation requests. So control should be with auditors, whether which kind of information to be obtained or what kind of confirmation we need to obtain from the party, that we need to determine. Then selecting appropriate confirming party is also very important, that we should be targeting, identifying the right party with whom we are trying to get the confirmation. And then those confirmations are properly designed, properly addressed, and contain the written information response to be sent directly to auditors. So that should be the response should be, we should ensure that we should target that we are getting confirmation response directly. When we are sending confirmation, then in case of non-receipt of confirmation, we need to follow up with the parties, and that should be by sending repeat reminders or through verbal communication with them, that they should respond to our letters. In case management refuses to allow the auditor to send audit balance confirmation or confirmation request, then first of all, we need to assess or inquire management reason for the refusal, whether this refusal makes sense or as per the industry practice, or they are trying to create a constraint on audit procedures. In case they are not allowing us, then we need to assess the implication of this refusal, and then we need to assess whether the risk of fraud or some other professional skepticism is being identified by us for such a refusal. So in case they are not allowing us, then we need to identify what alternate procedure we can perform to obtain relevant and reliable audit evidence. If management refusal is unreasonable, then we need to communicate to those charged with governance and assess implication on audit and auditor's opinion. So we need to conclude whether it has any bearing on our audit opinion. In case of doubt on reliability of response to confirmation request, and then we identify whether the response is not correct or appropriate, then we need to identify what further audit procedure we can perform to resolve those doubts. It is concluded that the response to confirmation request is not reliable. In that case, we need to assess the implication. We need to assess the implication in terms of risk of material misstatement, risk of fraud, and then nature, timing, extent of work procedure to be performed by us on that particular area. In case of each non-response, we should decide to perform and identify what is the best alternate audit procedure which we can perform to obtain relevant and reliable audit evidence. So when a response to a positive confirmation request is necessary and alternate audit procedure will not provide the sufficient audit evidence, we need to assess what is the implication on our audit approach and on auditor's opinion. In case there is no response of any confirmation, which is positive confirmation, which we have circulated to that party. So typically, negative confirmation is sent where the risk of material misstatement is low, controls are effective for relevant assertions, and the population of item comprises of large number of small homogeneous account balances, transactions, and conditions, and a very low exception rate is expected. In such situation, we can decide to perform send a negative balance confirmation request. So that's it from 505 perspective. Now I take up SA 510 initial audit engagements. So opening balances testing. So initial, there is sometimes people are not clear when this standard is applicable. So this standard is initial audit engagement where we are generally appointed first time as the statutory auditors. Here, in that case, initial audit engagement SA 510 is applicable, and we need to perform additional certain procedures to get comfort over the opening balances which were audited by other auditors. So I take up in subsequent slide about the procedure which we should perform on SA 510, sorry. So audit procedure for testing opening balances. So first of all, whether the prior period closing balance have been correctly brought forward to the current period, that should be the first auditing procedure we need to perform. Then we need to assess whether the appropriate accounting policies were adopted for the opening balances. Then we need to also perform one or more of the following procedure. Read the previous audited financial statement, whether current year's audit procedure performed, provide relevant evidence for the opening balances. So where we are performing statutory audit on the current numbers and we get some indication on the misstatement regarding any opening balance, then we need to identify and see the impact of audit procedure and the audit opinion. And then also we should decide to perform a specific audit procedure on opening balances, that how those balances are appropriate and are reasonable. So in case we find misstatement in opening balances, then we need to determine the impact on current year financial statement. So if there are some misstatement in opening balances, so then what is the impact on the current year financial statement? And if such misstatement identified in current period financial statement, then we need to communicate that misstatement with those charged with governance. In case we find that accounting policies have not been consistently applied, then we need to see adequate presentation disclosure of changes in the accounting policies, and those are properly accounted for by the client. So audit conclusions and reporting, modification in previous year audit opinion, we need to assess, evaluate the effect of that matter on current year or current financial statement. If auditor is unable to obtain sufficient appropriate audit evidence regarding the opening balances, then auditor to express qualified opinion or disclaimer of opinion as appropriate in the case. So where the opening balance contain a misstatement that materially affect the current period's financial statement, and the effect of financial statement is not properly accounted for, not adequately presented or disclosed, then we again need to decide among the qualified opinion or disclaimer opinion as applicable in the situation. So we may have to issue a modified opinion in case the current year's accounting policies are not consistently applied in relation to opening balances in accordance with the applicable financial reporting standard, or change in accounting policy is not properly accounted for, or not adequately presented or disclosed in the financial statement, or modification to audit opinion of previous year remains relevant, that last year accounts were or opinion was modified, and that modification is not resolved in current year also, and also is material, then we may have to issue a modified opinion for current year as well. So now we are on SA 520 analytical procedure. So in case audit team decide to perform analytical procedure, so we have to ensure that we are having proper process in place to place or reliance on analytical procedures. So typically analytical process comfort over analytical procedures are should be more rigorous in terms of audit approach. We need to see how those analytical procedures perform and what other lines has been taken and what is source of data used in the analytical procedure. So in subsequent slide, we pick up same key criteria which should be considered while performing analytical procedures. So substantive analytical procedure, this is a 4-step approach. So where first of all, we need to see that particular substantive analytical procedure we are deciding to perform is suitable to get comfort on relevant or particular assertion. Second, evaluate the reliability of data. So whatever data which we are using, whether the data is reliable, then we need to develop expectations of the recorded amount or ratio or evaluation, that whatever results we are trying to achieve, we need to set that expectation. And fourth is identify the difference between the analytical results and the expectations. And then a difference is accepted based on the materiality and consistency with the desired level of assurance. If the difference is within the materiality level or it is consistent with our expectation, then the difference will be accepted. On reliability of data, auditor need to evaluate the reliability of data by following procedures. So first of all, we need to see a source of information available. So what is the information, what is the source of the information where data has been obtained? Then comparability of the information available. Then nature and relevance of the information available. Thereafter, we also need to see control, whether controls are effective, operating effectively, where the data has been generated for this analytical procedures. Next important is setting of expectations. So auditor need to develop an expectation by predicting the expected results of the substantive analytical procedures. Then disaggregation of the information. So expectation should be at the disaggregate level. If there are multiple information are being analyzed, then we need to disaggregate to that respective areas at disaggregated level. Then availability of financial and non-financial information. Based on that, these criteria or these procedures, we can have good expectations, or we can set a good expectations for the analytical procedures. So these are the key considerations which I thought are good, and these were available part of the checklist where the auditor need to respond them, and which auditor need to follow during the audit, and need to document in auditing procedure and their work papers to establish that those procedures were performed properly, and the conclusions also are as per the documentation audit procedure performed. So that's it from my side. So I look forward for any observation or comments from the participants, and then now I give it back to Ashta ji and Lalit to take it forward.
Thank you, Mohan sir. It was really insightful and full of knowledge session. So thank you for that. So before moving ahead, I have one question for you. Like as an audit procedure, auditor had sent confirmation to 10 parties. So auditor has received only one reply out of 10 confirmation. So now, what are the procedures, alternate procedures auditor is supposed to do for the remaining 9 parties? Can you please enlighten us?
So as I mentioned earlier, first of all, we need to see why we have received only one confirmation. That is first of all to start with. So is it as per the past industry practice, or is it because of the company past experience with the company? So first of all, we should start from there. Thereafter, we need to see whether we have sent the confirmation to the right person. Then we need to see the address, or if we have used electronic, then we need to see whether those confirmation requests has been reached to the right party. And if we, after performing these confidence measures, then we need to send reminders to them. We need to send reminders, and typically in certain standard it is like sending 3 reminders are also very mandatory. So in our case, in Indian scenario, there is no mentioning of a minimum number of reminders, but at least we should send at least 1 or 2 reminders. Then thereafter, if amounts are material and we are this is very critical confirmation procedure which we decided to perform, then we should also talk to or call that party by getting independent numbers or phone numbers or landline number from independent source. Independent source is very important here, not from client. It should be taken from some, authenticated source like company's website or some other sources. Then we should request them, even if after not getting any confirmation by performing these procedures, then we should look at the alternate procedure which we can perform by looking at the evidence which are there already with the client. For example, in case of revenue, we should look at the invoices or subsequent collection received from the parties. In case of bank confirmation, we should look at bank statements or online balance confirmations. So there are some of the the alternative procedure which we can decide based on the situation and based on the typical scenario or as applicable in the audit.
Thank you, Mohan sir. Very well answered query. So, like with the nod, like when we don't receive the confirmation, we should go with the underlying documents and see the external evidences. So, thank you again. Now, I would say the rest of the question we will take at the end of the session. Answer. Now we'll be moving. Now we'll be moving for the next speaker. So can I quickly invite CA Asta Gupta to take forward the session? Over to you, CA Asta.
Thank you so much, Lalit. I'll just share my screen quickly. Sir, can you stop sharing your screen? Yeah, thank you. Yeah, is my screen visible?
Yes, Asta, your screen is visible.
Good evening, everyone. Before I begin my today's presentation, I would like to congratulate the AESB of the ICAI for launching this checklist on standards of auditing for the professional fraternity. It is for the convenience of professional auditors, and it's quite comprehensive. I would also like to compliment my co-speaker, CA Mohan Soniji, for beautifully deliberating and covering SA 500 to 520 in such a good time. And without any further ado, let's begin with the rest of the essays for today. So as informed earlier, I'll be continuing from SA 530 to SA 580. So SA 530 is on audit sampling, SA 540 is on auditing accounting estimates, SA 550 relates to related party, SA 560 is on subsequent events, 570 going concern, 580 written representation. So I'll just quickly tell you how I'll be presenting today's deck. So basically, I have divided my each essay into three parts. First, it'll be like a small recap in the form of objective and the important terms used in the essay. Then we will move on to the checks that form part of the checklist as issued by the AASB. In checklists, it's basically, it comprises of all the important parts of the essay. So some part, it might get a little exhaustive, some will be brief. So let's begin with first essay for today, which is essay 530, audit sampling. The objective of this particular essay is to provide a reasonable basis so that the auditor can draw a conclusion from the population on which the sample is selected. We have few important definitions related to this particular essay. First is a sampling risk. Now, sampling risk is the risk wherein the auditor's conclusion, which is based on the sample, it can be different from the entire, if that particular audit procedure was applied to the entire population, the result becomes different. So this is the risk which is associated with sampling. And the audit conclusion can be of two types. So there are two erroneous conclusions. First is regarding test of controls. That is, the controls appear to be more effective than they actually are. That is, they are not that effective as they're appearing. And in case of test of details, the material misstatement, it appears as if the material misstatement does not exist, but it actually exists. So in this particular scenario, this kind of erroneous conclusion, it results in inappropriate audit opinion. The second kind of erroneous conclusion is when the test of controls, they are actually less effective than they actually are. I mean, the controls are basically more effective, but they appear to be less effective. And in case of test of details, the material misstatement exists when in actuality it does not exist. So in this particular scene, the auditor might have to do additional work to prove that the initial conclusions were incorrect. Needless to say, amongst these two, the first one is more risky because here the auditor opinion becomes inappropriate. Next, we have statistical sampling. So statistical sampling is basically where we carry out sampling on random basis and we use probability to evaluate the sample results. And non-statistical sampling, which I've not covered here, anything which is not covered in a statistical becomes non-statistical sampling. Next, we have tolerable misstatement. Now, this particular aspect relates to level of controls. So in case of tolerable misstatement, the auditor sets a certain threshold in the monetary amount. And if the actual misstatement exceeds a particular threshold, then that becomes a sign of risk. Next, we have tolerable rate of deviation. This in cases of test of controls. So this one, the tolerable misstatement was in the case of test of details, and tolerable rate of deviation relates to test of controls. So here also the auditor defines a small rate and it defines a threshold of rate of deviation. So wherein the internal controls, they exceed that rate of deviation, that means a sign of risk. With this, let's begin with the checklist on SA 530. In the first part of the checklist, we will be concentrating upon sample design, size, and selection of items for testing. So how does the auditor design the audit sample? So first, the auditor needs to establish the purpose of carrying out the audit procedure, that what kind of test or what kind of audit will be done on a particular sample, and what will be the characteristic of the population from where the sample will be drawn. Secondly, is the sample size which has been selected is sufficient to reduce the sampling risk? Remember, we had explained sampling risk in the first slide, that the sampling risk should be there at an acceptably low level. Thing to note here is that the level of risk is always inversely proportional to the sample size. Next in the checklist, we have how do we select the sample units. So again, we had explained in the definition section regarding statistical sampling and non-statistical sampling. So in case of statistical sampling, each sampling unit has a certain probability attached to it. And in case of non-statistical sampling, the auditor uses judgment on the basis of prior experience, trends, and selects the sample. The end goal of selection of sample unit is that the sample should represent the characteristics typical of the entire population. That makes an ideal sample. Next in the checklist, we have performing audit procedures. So in order to perform the audit procedure on the sample, the auditor should consider these points. It should be first in line with the predefined purpose. If the audit procedure is not applicable on a certain unit of a sample, then the auditor should look for a replacement unit there. And in case none of these is possible, that is, the audit is not being performed as per the purpose and the audit procedure cannot be done on a replaced item, then that means this is a sign of deviation from the prescribed control or misstatement in case of test of details. Now, moving on further, we have seen that there was a sign of misstatement and deviation. So the auditor will perform checks related to understand the nature and cause of the same. So in this particular aspect, the auditor will check how to evaluate the possible effect on the purpose of the audit procedure. Now, there can be a situation where this misstatement or deviation is considered as an anomaly. Now, what's an anomaly? So anomaly is like a misstatement or deviation, which is, it is pertinent to a particular sampling unit, but it is not representative of the entire population. So on the basis of anomaly, I cannot derive that, just because the misstatement is present in anomaly, that means it's present on the entire population also. But in order to establish a particular sampling unit is an anomaly, a high degree of certainty is required by performing additional audit procedure to obtain sufficient audit evidence that such misstatement or deviation is not representative of the population. Here, the auditor needs to be quite cautious. Next in the line, once we have understood the nature and cause, the auditor needs to perform checks related to projection of the misstatements. In this, what happens is because we have understood the misstatement and deviation at the sampling unit level, at the sample level. So now this needs to be projected at the entire population out of which the sample was selected. So that to understand the view of scale of misstatement across the entire population, the auditor needs to check that the anomaly part is excluded from the projection process. Once the projection is done, the next in the checklist, we have the evaluation of the result of the audit sampling. Now, in case of test of control, So remember, we had talked about tolerable deviation. So in case there is a high deviation from the tolerable rate, which is a threshold limit, then this means that there's a high risk of misstatement in the internal controls. And moving to test of details, if there is a high deviation from the tolerable misstatement, this means there is a high risk of presence of material misstatement in transactions and account balances. Test of details pertains to transactions and account balances. So overall, the projected misstatement plus anomalous misstatement, if this part is higher than the tolerable misstatement, that means the sample is not providing a reasonable basis about testing of the population. And herein, the auditor needs to perform additional or gather additional evidences. It may either change the change of sample or sample size, etc. On the basis of above, the auditor passes the conclusion by stating that, and in case the audit conclusion is such that it does not provide a reasonable basis about the population which has been tested, then the auditor will discuss with the manager, can extend the sample size or test an alternative control. Next, we will move on to the next essay. I will cover essay 540 in the end. So we'll first pick up essay 550, which is related parties. Now, it doesn't matter whether the applicable financial reporting framework establishes the related party requirements or not. The auditor is responsible to understand the related party transactions and relationships so that the auditor can recognize the fraud risk factors either arising from the relationships or transaction, so that ultimately the risk of material misstatement due to fraud can be identified and assessed. And to conclude, if the financial statements achieve true and fair presentation or are not misleading. Wherein the applicable financial reporting framework, it establishes the need to identify the related party and transactions, then the auditor is required to obtain sufficient and appropriate audit evidence. We'll quickly go through one of the few basic definitions of related parties. First is the arm's length price. So arm's length price is the value of a transaction, the terms and conditions of a transaction, if it takes place between two unrelated parties which are independent of each other. So arm's length price or ALP basically becomes a benchmark, and it is compared with the price at which the transaction takes place between the related party. I'll explain this in the upcoming slides. Then definition of related party. Normally, we bank upon the definition given under AS 18 or Ind AS 24 to where the financial reporting framework establishes to follow these accounting standards. Where it does not, then the related party is defined in the following manner. So I'll talk from the reporting entity perspective. So any entity or person which is exercising control or significant influence either directly or through intermediaries over the reporting entity. Then another entity on which the reporting entity is exercising control or significant influence, again, directly or through intermediaries, or the entity along with the reporting entity is under common control, either through, controlling ownership or through owners who are close family members. Suppose two brothers, they are owners of these separate entities, or they have common key management, they could be directors, etc. So all these are the definition, they come under the definition of related parties, and this is how we identify related parties. Let's begin with the checklist related to SA 550. Understanding the entities, related party relationships and transactions, very important. So first, the auditor needs to understand that who are the related parties and what are the related party transactions before it identifies a material misstatement due to fraud or error, which could arise from the related party transactions or relationship. So as I had said, the checklist will include the identification and update. Update meaning like if you are an auditor from the past few years, so you just need to update if there's any change in related party or not. Then similarly, identification and update of related party transaction. Now the auditor needs to exercise professional skepticism while identifying the material misstatement to related party transaction. Unidentified, undisclosed related party and related party transactions is very important, and I have a slide on this in the upcoming slides. Then, very importantly, management's intent regarding identification and reporting of the related party transaction. That if the management is aware about carrying out this process or not. What kind of frauds can arise? There are two examples that were given in the checklist. First, sometimes what happens is there could be some special purpose entities which are controlled by the management of the reported entity, and it has an interference with the management of earnings. Secondly, there could be transactions between the entity and some known business partner, resulting in misappropriation of the entity's assets. Continuing with the understanding bit, the second part to this checklist is to inquire from the management, which we've already covered above, which I talked about how to identify the related parties in related party transaction and nature of transaction with the related party. So this is when you try and understand about the management's awareness level. Next, we have to refer to the financial reporting framework and establish the related party requirements from there. Now, if these related party requirements are established by the financial reporting framework, then in that case, you can refer to the information system or the MIS to understand how these transactions are recorded, processed, and summarized. If there is no established requirement by the financial reporting framework, then the auditor can pick up additional measures in the form of entity's ownership, types of investment that the entity wishes to make, what are the financing ways, and significant transaction, etc. Moving further, now the auditor needs to understand the control environment surrounding the identification of related party and the transactions. And whom should the auditor approach? Other than the management, we have those charged with governance, internal auditor, in-house legal counsel, chief ethics officer, someone who is, initiating, processing any transaction which lie outside the entity's normal course of business, and person supervising such person. And what are the checks that the auditor can carry out? So, auditor needs to understand how does the management identify, account, disclose the related party and the transaction as per the financial reporting framework. What are the controls surrounding the authorization and approval with special focus on the transaction outside the normal course of business, and gathering the understanding of the control environment. So control environment can basically comprise of the internal ethical codes for employees, policies and procedure for disclosure of RPT, allocation of responsibility, then disclosure of related party transaction beyond normal course of business, review by internal auditors, existing or whistleblowing policies and procedures. So this way the auditor gathers the understanding of the control environment. And these examples are exhaustively given in the checklist. The auditor needs to understand here that wherever the management's relationship is with the entity which have control or significant influence over the reporting entity, it's a flag for high risk. And there are a few examples of this. For example, I'll just take one example here, wherein the auditor realizes that the assets and, for example, fixed asset or stock, they are being transferred to the other related entity at a price higher or lower than the arm's length price. This is how the arm's length price comes into play under related party for personal benefit. There could be complex transaction related parties, etc. Now, once the auditor has understood, identified the related parties, the transactions, understood the control environment, we will move forward with regarding making the conclusion. Now, the auditor can conclude either the controls are ineffective, or they are not present, or they are inadequate. So a few examples of the same could be that how much importance does the management attach to the identification and disclosure of related party. Then if there is deliberate oversight by those charged with governance, intentional override of controls, insufficient understanding of the management as per the applicable financial reporting framework, etc. So in all these instances, if the auditor concludes, these are basically flags. These are basically indicators that how the auditor will come to conclusion that the controls are ineffective or inadequate. Then the auditor can proceed with a passing of the modified opinion. Next in the checklist, we have maintenance of alertness of related party information when reviewing transactions or documents. Now, what happens is during the course of audit, after inquiring from the management, the auditor can come across certain related party or related party transaction which were not disclosed by the management or those charged with governance. And how do you come to know about them? So there are different sources of information like back confirmation, third party confirmation, minutes of meetings with the shareholders, compliance reporting under different statutes like CARO, there's clause 13, there is a clause 23 of the tax audit report. Then contracts and agreements with the key management personnel, insurance policies. So this is not exhaustive list, but few examples of third-party verifications wherein the auditor can discover and check if there aren't any unreported related party or transactions. Once this is established, then you need to also check if there is a participation in unincorporated partnership with other parties, whether there are agreements, the terms of which are outside the entity's normal course of business, their guarantees and guarantor relationships. These can also help in establishing of discovery of related party or related party transaction, which are not disclosed, which is a transaction outside the entity's normal course of business. Few examples have been given in the checklist. For example, complex corporate restructurings, transactions in tax havens like Malta, Cayman Islands, sale transaction with unusually large discount of returns. So all these are indicators of identifying transaction lying outside entity's normal course of business and help in discovery of the related party or transaction which are not disclosed by the management. Now, once you have established that there are related party transactions outside the entity's normal course of business, we need to inquire and understand as to why the management or those charged with governance did not discuss it with the auditor, and why was this a requirement to carry out the transactions which lie outside the normal course of business. So we have to be very cautious here by checking if there was no fraudulent financial reporting. The terms and transactions, they are consistent with what the management is sharing with the auditor, and they have been appropriately accounted for. So very importantly, collect appropriate audit evidence as per this particular check. Next, in the next part of the checklist, the auditor will share this information with their engagement team. Now we need to understand that all these were flags of material misstatement. So how will the auditor respond to them? In this particular check, the auditor can carry out substantive audit procedures. For example, they can confirm or discuss these aspects with the third parties like banks, law firms, guarantors. They can confirm the specific terms and transactions with the related parties, inquire from the management and related party, inspect specific contracts, review of the employee whistleblowing reports if they are present, and they can do appropriate background research by maybe Googling it or going to the website of that entity. So this way you can understand and collect more audit evidences. Once the auditor has identified unidentified or undisclosed RPT, you immediately have to communicate to the team so the effect of the same can be done, taken in the working papers. Then talk to the management, inquire that why the entity's controls and transaction fail to enable identification disclosure by the management level. So basically here the auditor is trying to establish if this was a deliberate undisclosure or it was done by mistake. And also what is the implication on the audit if the non-disclosure by management appears to be intentional. Here also the auditor can carry out substantive audit procedures. They can use computer-aided audit techniques. They can inquire from third parties. They can verify the transaction for newly identified related party and cross-verify whatever the management has told them. Next in the checklist, we'll move on to certain assertions that related party transactions were conducted on terms equivalent to those prevailing in arm's length price. So here the auditor has to seek sufficient and appropriate audit evidence wherein the terms of the related party will be compared with the unidentical party. You can also engage an external expert to determine the acceptable market value and compare them with the value of transaction. So this way, the auditor can assert if the transactions were carried out at arm's length price or not. Next, evaluation of the accounting and disclosure of the related party transactions. So if the auditor is of the opinion that proper accounting is done and the disclosure is as per financial reporting framework, it will give an unqualified opinion. But if it is negative, then in that case, the auditor has to establish the effect on the financial statements. He has to check if this prevents the financial statement from achieving fair and true presentation, or if it causes the financial statements to be misleading. Now, in this particular scenario, depending upon the pervasiveness of the material misstatement, the auditor will give qualified opinion or modified opinion. The written representation, the auditor needs to obtain from the management. So here, basically, the auditor will ask the management if they disclose the identity of the related party and transactions, they have been properly accounted for and disclosed. And you can also refer to those charged with governance. There can be extra compliance forming part of the checklist, wherein there are certain points relating to communication with those charged with governance. So the auditor can inquire about non-disclosure, significant related party transactions, then non-compliance with certain law and regulation which affect the related party transaction disclosure, and difficulty in identifying the parties, which ultimately controls the entity. Proper documentation, needless to say, will include the name of the identified RP, that's related party, and nature of related party transactions. With this, we come end to the related parties. Next, we'll go on to SA 560, which talks about subsequent events. Before I discuss the objective, I will quickly tell you the definition of subsequent event. So refer to this timeline, which gives 4 dates. I will describe what do these dates mean. First, we have the date of the financial statement, which is 31st March 2023. Next date, 30th June 2023, is the date of approval of the financial statements by the management. Next, 31st August 2023, this basically signifies the date of completion of the audit, the date of the audit report. Next, we have 15th September, which is the date of the issue of the financial statement, the audited financial statements by the board to the users of financial statements. Now, any event which lies between date of financial statement and date of audit report, that is 31st March 2023 and 31st August 2023, or any event which lies after the date of audit report and beyond or till the date of issue of financial statements, such events and such conditions will fall under the definition of subsequent events. So now that we've understood the definition, I'll quickly walk you through the objective of this essay. So the auditor is required to obtain audit evidence about such events, the subsequent events, whether they have been properly adjusted and disclosed in the financial statements by the management, and basis such disclosure, if the auditor has amended the financial audit has amended the auditor report or not. We will quickly begin with the checklist. First, we need to understand how the subsequent events, that is the events occurring between date of financial statements and date of auditor's report, are identified. So the auditor needs to understand the procedure adopted by the management, because primarily it's the responsibility of the management to identify the subsequent events. Then inquire about the SE. You can also refer to the minutes of meetings held after the date of the financial statement to identify the subsequent events, latest interim financial statement. In case of absence of above documents, you can also refer to the bank statement to identify any transaction has taken place, which will fall under definition of subsequent event. Latest budget and cash flow forecast, inquire from in-house or outside legal counsel. So these can act as basis for identification of the subsequent events. Once this is done, these are few examples of the conditions or events which can fall under the definition of subsequent events. For example, sale or acquisition of assets, increasing capital, any development regarding contingencies, events that have occurred which are relevant to measurement of estimates or provisions made in financial statements, events related to recoverability of assets, etc. So all these examples, they also form part of the checklist. So you can always refer to them while identifying the subsequent events. Once the subsequent events have been identified, the auditor needs to, record the events which will require adjustment and disclosure in the financial statement, and then check if the management has actually reflected the same in those financial statements as per the applicable financial reporting framework. Next in the line, we have checks related to written representation. So the auditor is required to seek a written representation from the management and those are the governance regarding proper disclosure and adjustment of the subsequent event as per the applicable financial reporting framework. Now, this checklist pertains to the facts which come to known to the auditor after the date of audit report. The audit has been completed. The audit report has been issued, but before the date of audited financial statements are issued. So basically, whatever events fall between these two dates, then what kind of checks the auditor needs to do, we will discuss those. So firstly, if the auditor feels that had the auditor known about this event at the time of conducting of audit or on the date of the audit report, and the audit report would have been amended, then the auditor will proceed with amendment in the audit report. For that, the auditor needs to discuss, bring in cognizance the matter with the management and those who have with governance, check if the financial statement have to be amended, and inquire how and what action will the management take while addressing this particular amendment in the financial statements. If the financial statements, if the management agrees to amend them and gives adequate disclosure, then the auditor will extend the audit procedure to the date of the new auditor's report, only to that extent. I mean, the extent of the new event or condition, and can issue the new auditor's report on the amended financial statements. Now, if the amendment in financial statement is not prohibited by any law or regulation, the auditor can also use the concept of dual dating. So what happens is the auditor does not amend the financial report, if we refer back to this slide, our audit report date was 31st August 2023. So here the auditor will give the audit report date as 31st August 2023, but will make this disclosure. The auditor will refer back to this particular note. So I have given note Y as an example. The note which has been given in the financial statement regarding the event that has been recognized after the audit report, and mention here that although the date of the audit report is 31st August 2023, except as to note Y, which is of the date of completion of the audit procedure restricted to the amendment described in note number Y. So for example, we extended the audit procedure for that particular note to, let's say, 7th September. So the second date will be mentioned, but only to the extent of that particular event. Or the other option is, Anilji, your mic is not on mute. Yeah. So the other option is that the auditor can issue a new amended report by giving an emphasis on other matter paragraph by mentioning that the auditor's procedure on subsequent events are restricted solely to the amendment of the financial statement and described in relevant role to the financial statement. Now, let's say the auditor inquires with the management, informs them about this event, but the management does not amend the financial statements. So the auditor will pass, in this case, a modified opinion. He will inform the management that you should not issue the financial statement without the amendment because the disclosure is not adequate. There can be instances wherein the management disagrees with the auditor and goes ahead and issue the financial statements. So it is suggested for the auditor to seek legal help. Next in the checklist, we will address the issue wherein where the event takes place after the issue of the audited financial statement. So earlier, our time scale was varying between the audit report and date of issue of financial statement. Now we have to make an assumption that the financial statement which were audited have been issued, and then the auditor comes to know about a subsequent event. So what kind of checks will the auditor make? So again, if the auditor feels that yes, my audit report would have been changed if I had known about this event on the date of the audit. So in that case, the auditor will discuss the matter. He will check if the financial statement has to be amended, and then inquire from the management what action will the management take. If the management goes ahead and amends the financial statement, the auditor will extend the audit procedures and take extra steps. Then the auditor needs to check if the management has informed the recipient of the financial statements about this particular subsequent event and told them a new set of financial statements and audit report will be released. Then the auditor will extend the audit procedure and then issue a new auditor's report. In addition to this, the auditor will give a modified opinion, but in that case, it will also give an emphasis on matter and other matter paragraph where it will refer to the note in financial statements about the reason of amendment in the previously issued financial statement and to the earlier report to basically, draw the attention of the users of the new financial statements and the new auditor's report. I'm sorry, I mentioned modified opinion, it will be unqualified opinion. Then, moving on further, the auditor needs to check if the management has taken appropriate steps to inform the user of the financial statement about the amended financial statements. If no steps have been taken, then it becomes the duty of the auditor to discuss with the management about taking steps, about informing the users that should not place the reliance on this previously issued financial statements or auditor's report. Still, if the management does not agree with the auditor and does not take any appropriate steps, the auditor can go ahead and seek legal advice. With this, we come to end of the subsequent events. Next, we have SA 570, which deals with going concern. So the objective of the going concern is to basically obtain sufficient and appropriate audit evidence so that the auditor can conclude upon the appropriateness of the management's use of the going concern basis of accounting. And also take the basis on the audit evidence obtained, the auditor should be able to conclude if a material uncertainty exists related to event or condition, which may cast significant doubt on the entity's ability to continue as a going concern. And then report accordance with this essay. So very quickly, we'll jump on to the checks related to this going concern. First and foremost, the auditor has to check if the management has performed a preliminary assessment of the going concern condition of itself. So the primary responsibility of assessing the going concern condition of the entity lies with the management. And it basically depends upon various operational and financial indicators. Financial indicators can be, key financial ratios, the borrowing limits, They could be also operational indicators can vary from the labor union presence, what kind of products the entity is dealing with, if there's change in management. So all these aspects, they have a direct impact on going concern. And this can act as a base for a management to determine the assessment of the going concern. Now, if the management has conducted a going concern assessment, then the auditor needs to check if the management has identified events which may cast a significant doubt on the entity's ability to continue as a going concern. If the management has not conducted any going concern assessment, then the auditor needs to inquire with the management as to how the management has determined if the entity can continue as a going concern. And using the alternative method, if the how has the management identified the events which can cause significant doubt on the entity's ability to continue as a going concern. On the basis of the above, the auditor needs to assess if there are certain event and conditions which can cause significant doubt on the entity's ability to continue as a going concern. So in this case, the auditor will basically revise the assessment of the risk or material misstatement and perform additional audit procedures as given in SA 330. Once the auditor has established that the management has carried out the assessment of going concern, now it becomes auditor's duty to assess management's assessment, whether it is in the right direction or not. So first of all, the auditor will check if the assessment done by the management is in line with the assessment carried out by the auditor. So whatever financial and operational indicators that the management had depended upon, the auditor can refer to the same and see if it is almost on the same line as that of what the auditor is concluding. There can be instances wherein the period of assessment of the going concern assessment is less than 12 months. So basically the SA requires that the minimum period of assessment of going concern should be at least 12 months. But if the auditor realizes and on inquiring with the management that the period of assessment of testing of the going concern is less than 12 months from the end of the financial year, then the auditor can request the management to extend the assessment to a period of at least 12 months so that it is in line with the standard of auditing. There are few exceptions to above, like for example, there could be small entities whose going concern is not that impacted. They may not extend the assessment, but in this case, the auditor should seek additional audit evidences in the form of medium or long-term financing plan, orders for future supply, and any other basis. There could be instances wherein the auditor feels, in his opinion, to extend the period of testing of the going concern assessment beyond the period of 12 months also. So in this case, the auditor needs to inquire from the management that whether there are any events or conditions beyond the period of the assessment chosen by the management, which can cause significant doubt over the entity's ability to continue as a going concern. And also, if the auditor is able to, establish the impact of the same on the existing assessment to continue as a going concern. So herein, depending upon what is the event and condition, and if the management has made such assessment, the auditor can extend the assessment period. Now, once we have inquired from the management, we have done all kind of assessments, we can identify certain events and conditions. So what are the additional audit procedures that the auditor needs to carry out once this identification has been done? So first of all, if the management has not done the assessment, because primarily the management is responsible to carry out this going concern assessment, so the auditor will approach the management to do the same. If the assessment has been performed, so what kind of future actions the management foresees to take so as to deal with the going concern condition? One example is that if the management has prepared cash flow forecast along with analysis, which significantly contribute towards the future action. So basically, preparation of the cash flow forecast and certain projection, it is like an action that the management is taken to substantiate its ability to continue as a going concern. So if the auditor gets hold of this cash flow projection, so the auditor needs to check the quality of data that has been used to generate this particular forecast, and what are the other supporting evidences and assumptions that have been used to prepare this particular forecast. Discovery of additional parts of information. Very importantly, seek written representation from the management regarding what are the plans of future action so that the entity can continue as a going concern. And The auditor can also perform few additional audit procedures, which are given in the essay as well as the checklist. So this could be, as explained above, they can analyze the cash flow and profit and other forecasts. Then, if the interim financial statements have been issued by the entity, the same can be analyzed and discussed. If there are certain debentures or loans taken by the entity, then the auditor can review the agreement and check the charge creation on the MCA side. Very important evidence is the reading of the minutes of meeting by the board meeting, shareholders, to check for instances which can cause doubt over the entity's ability to continue as a going concern. Then inquiring from the in-house or external legal counsel regarding the existence of litigation and claims, because this can also affect the going concern. Evaluation of how does the entity plan to deal with future orders. Then confirmation of existence, terms, and adequacy of the borrowing facilities, like if the borrowing agreements are in place, if the terms of the sanction letter, they are in favor of the entity, if they have been renewed, what is the status of the stock and debtor statement, etc. Are they regular in, repaying the loans? Then checking the compliance culture, basically the compliance environment of the organization in terms of filing of the statutory returns, replying to notices, paying the demands, penalties. This is also part of the CARO checklist. Determination of adequacy of support for planned disposal of assets, checking financial arrangement with related and third parties along with the financial ability. So this is linked with SA 550 that we have discussed because it relates to the valuation of transaction at arm's length price. So these are few of the additional audit procedures that form part of the checklist, on the basis of which the auditor can gather sufficient and appropriate audit evidence to determine whether or not certain material uncertainty exists regarding the entity's ability to continue as a going concern. Now, once the audit procedures have been performed, we have identified the conditions, inquired from the management, the times come for conclusions. Now, if the auditor feels that the management's use of going concern basis of accounting is appropriate and same reflects in the preparation of financial statements, the auditor will have to gather sufficient and appropriate audit evidence on the basis of the steps that I have given in the previous slides. And the auditor needs to cross-check, I'm repeating this again and again, of existence of conditions and events which can result in material uncertainty and cast a significant doubt on entity's ability to continue as a going concern. So this particular detailed section, if you review here, that acts as a basis for the auditor to conclude about the going concern. And that is why it is very important and forms part of the checklist. Now, once this is also part of the auditor conclusion only, the auditor needs to determine the adequacy of the disclosures when the event or conditions have been identified and material uncertainty exists or does not exist. So we'll test few scenarios here. The auditor has concluded that the material uncertainty exists and the management agrees with it. So in this case, the management has to give adequate disclosure in the financial statement by clearly stating that there is material uncertainty related to events and conditions, and this can cause doubt over the entity's ability to continue as a going concern. In this, the management needs to give the principal events, the conditions which are causing the doubt. Then how will the management deal with the event or conditions in the upcoming future so that the entity can continue as a going concern? And clearly, these are the words of the SA 570 only. Clearly, the management has to disclose that there is material uncertainty and the entity may not be able to realize its assets and discharge liability in the normal course of business. So this is like an honest attempt by the management to disclose that yes, there is material uncertainty. Yes, it can cause doubt on the entity's ability to continue as a going concern. But in this particular case, the management has certain plans to deal with them. Now, if the above disclosures have been made, then the auditor can give unmodified opinion. As an extra precaution, in the emphasis on matter paragraph, the auditor can give this statement by stating that the material uncertainty exists that casts significant doubt on the entity's ability to continue as a going concern, and the auditor's opinion is not modified. This is just to draw the attention of the user of the auditor report in respect of that matter. And then you can give the reference of the note in the financial statements, which gives the principal event and this particular disclosure. Next, if the disclosures have not been made by the entity or they are not adequate in opinion of the auditor, in that particular case, the auditor will give modified opinion, qualified or adverse depending upon the material pervasiveness. And below the basis of qualified opinion paragraph, the auditor will mention that a material uncertainty exists which may cast significant doubt on the entity's ability to continue as a going concern, and that the financial statement do not adequately disclose this matter. So herein the auditor is calling out the management for not disclosing this matter, and that is why the auditor is taking the responsibility on himself to disclose this particular fact. Now the auditor can be of the opinion that the going concern basis of accounting is inappropriate, right? So there can be two instances that even though the auditor has established that the going concern accounting basis cannot be used, but still the management has gone ahead and prepared the financial statement on going concern basis. So in this case, needless to say, the auditor will give adverse opinion because the financial statements have been prepared on going concern basis. But let's say the management agrees with the auditor and prepares the financial statement on alternate basis, say liquidation basis. So in this particular case, the auditor will have to give unmodified opinion, provided adequate disclosures have been made, and then mention in the emphasis of matter paragraph to draw the user's attention to the alternative basis of accounting and the reason of its use by giving reference to the note in the financial statement wherein the management has made this disclosure. This is how the auditor will give conclusion here. Now, let's say the auditor had requested the management to extend the assessment because the auditor felt that whatever period the management had selected for carrying out the going concern assessment was not enough, and the auditor could foresee certain events or conditions beyond that particular period. But the management disagreed with the auditor and did not extend or make the assessment. So in this particular case, the auditor will give qualified opinion or disclaimer of opinion if the auditor has no sufficient and appropriate audit evidence to prove that the entity can continue as a going concern. Next in the checklist, we have certain aspects that the auditor can discuss with those charged with governance. So once the auditor has identified the events and conditions which cast significant doubt on the entity's ability to continue as a going concern, the auditor can discuss that whether the events and conditions constitute a material uncertainty, whether the management's use of going concern basis is appropriate in the preparation of financial statements, whether the related disclosure in financial statements are adequate, and where applicable, the implications of the auditor's report. So basically, in this particular check, in addition to the management, these points can also be discussed with those charged with governance. If there is significant delay in the approval of the financial statement by the management can inquire, and the auditor can inquire from the management and understand the impact of the same on the going concern assessment. Now, this is one of the indicators of the going concern being impaired of the particular entity. So the auditor can inquire about the reason for delay, and depending upon whatever information has been shared by the management, the auditor needs to understand the impact on the auditor's report and perform additional audit procedures if required. With this, we come to the end of SA 570. Next, in line, we have SA 580, which deals with written representations. So the objective of written representation is that the auditor needs to seek written representation from the management, wherein the management confirms that it has fulfilled its primary responsibilities on the basis of which the audit is conducted. Then to seek audit evidence relevant to financial statements and specific assertions by the means of written representation, wherein it is necessary as per the standard of auditing. So if we refer back to whatever essays we have discussed or Mohan sir has discussed, the written representation forms part of certain essays and it gives what kind of written representation the auditor needs to seek. So on the basis of which the auditor concludes. And next objective is that to respond appropriately on the written representation provided by the management, and in case the management does not provide written representation requested by the auditor. So these are the objectives of the written representation. Let's begin with the checklist on written representation. So first, the auditor needs to understand who are the people from whom the written representation will be requested. Needless to say, obviously the first point of contact will be the management. In case absence of management or in addition to the management, the auditor can also seek written representation from anyone who is responsible for preparation and presentation of the financial statements. So these can be those charged with governance, the CEO, the CFO, actuary, staff engineers, internal legal counsel, etc. In the management representation, the checklist specifically asks the auditor to include that the auditor has made the inquiries as it considered appropriate to place himself or herself in the position to be able to make the requested written representation. So this disclosure should be given in the written representation, which is being sought from the management or any of these people. Next, in the checklist, we have written representation about the management responsibilities. Like I said in my previous explanation of the standards in auditing, certain aspects are there which are the responsibility of the management, so that the management does not shy away from carrying out the responsibility, or do not dispose themselves from carrying out the responsibility. This written representation regarding management responsibility becomes very important. Herein, as per the checklist, this is what the content of the written representation should fulfill. First of all, the management had fulfilled its responsibility in relation to preparation and presentation of financial statement as per the terms of the audit engagement and as per the applicable financial reporting framework. It has provided the auditor with all the relevant information and access as agreed in the terms of audit engagement, and all the transactions have been recorded and are properly reflecting in the financial statements. The auditor also needs to check that the responsibilities are in terms with whatever have been defined in the terms of audit engagement. Now, there can be other written representations which have been defined in particular essays. So if you refer back, I had mentioned in essay 570, I've also mentioned essay 550 and other essays also. So there's specific disclosure to be made in written representation, which forms part of the essays. So when the auditor refers back to those essays, those written representations should also be sought from the management, which helps an auditor to conclude and to give the auditor opinion with regard to that particular essay and its compliance. In addition to the above, there are certain additional written representations about the financial statements. So the auditor needs to take written representation about the financial statements, which categorically refers to the selection and application of the accounting policies, then recognition, measurement, presentation, and disclosure in the financial statement as per the applicable financial reporting framework. Few examples are given in the checklist. For example, plans or intentions which may affect the carrying value or classification of assets and liabilities, both actual and contingent, title to or control over assets, liens, encumbrances of asset and asset pledges collateral, aspects of law, regulation, and contractual agreements which may affect the financial statement, including non-compliance. In addition to the above, there are specific assertions that the auditor may require to make during the course of his audit. And in respect to the specific assertions, it is advisable to the auditor to seek written representation. So specific assertions can include judgments and intentions. And few examples have also given in the checklist, like entities' past history in carrying out the stated intentions, reasons for choosing a particular course of action, ability to pursue a specific course of action, existence or lack of other information inconsistent with management judgment or intent. So wherever either as a part of the audit, where the auditor can itself make specific assertions, or there are certain essays where the assertions have to be made in compliance with the standard auditing, it is a good practice to seek written representation regarding those specific assertions made by the auditor. Next, date and period covered by the written representation. The date of the written representation should be nearest to the date of the auditor's report on the financial statement. The auditor should ensure that the written representation covers the entire financial statement and the period of auditor. The written representation format can remain same across different financial years. It can be modified with respect to certain updates or changes which are made from year to year. So that way the effort reduces, but it still forms a very important part of the audit. Now, there can be instances wherein the auditor can have a doubt on the reliability of the written representation submitted by the management, or there can be instances wherein the management refuses to submit the written representation. So what are the checks that the auditor should carry out in such instances? So first, we'll talk about written representation which are inconsistent with the audit evidence obtained. So in this particular case, first of all, the auditor needs to perform a procedure to resolve the difference between the audit evidence and the written representation collected from the management. So here I'll highlight something very important. Written representation is important, but it does not act as a conclusive evidence in itself. You as an auditor need to gather evidence and then compare it with the written representation. So it becomes like a method of cross-verifying your evidences. Now, in case there is no resolution, then the auditor will go ahead and consider the competence, integrity, ethical values of the management, will consider the management's commitment towards providing the written representation, and if the commitment has been enforced, then all these aspects will be considered, and the auditor needs to evaluate the effect of these factors on the reliability of the representations. If after considering the above factors, the auditor still feels that the written representation is not reliable because it was firstly inconsistent with the audit evidence, then in that case, the auditor will modify the audit opinion. And there can also be an instance where the risk of the management representation is such that the audit cannot be conducted. This is an extreme scenario. So this is like a red flag. So in this particular scene, also the auditor will modify the audit opinion. Now, let's say the auditor has approached the management and they have highlighted that, listen, the written representation shared with us do not seem reliable and there can be certain modification that need to be placed. And let's say the management agrees to modify the written representation. Then in that case, if the same has been done, then the auditor needs to establish the impact of the modification in the written representation in the auditor's report. Now, let's say if the auditor has approached the management to modify the written representation, but the audit management refuses to make such modification and does not share such modification, then the auditor needs to discuss with the management. The auditor has to reevaluate the integrity and the ethical values of the management. And basis on above, the auditor needs to consider whether the representation shared by the management is reliable or not. Depending upon whatever results the auditor gets from performing these steps, the auditor will move ahead and modify the audit opinion. In case the effect of the above is such that the auditor is not able to collect sufficient and appropriate audit evidence, then in that case, the auditor will give disclaimer of opinion in the audit report. Last but not the least, we have come to SA 540, which deals with auditing accounting estimates, including fair value accounting estimates and related disclosures. The objective of the auditor for SA 540 is to obtain appropriate audit evidence relating to the accounting estimates, whether they are disclosed and recognized and they are reasonable. The disclosure given in the financial statement pertaining to accounting estimates is adequate. These are a few important definitions covered in the audit and accounting estimates. I'll just quickly go through them. There's accounting estimate, which is basically the approximation of the monetary value. Then management bias, that the management is not able to take a neutral view in the preparation of financial statements. Then management's point of estimate, that on what basis the management has recognized or disclosed the accounting estimate in the financial statements. Auditor's point of estimate, that on what basis the auditor has made the accounting estimate, and outcome of the accounting estimate, which is the monetary amount. Let's begin with the checks related to SA 540. So in this particular aspect, first the auditor needs to carry out risk assessment procedures and activities related to the accounting estimate. So the auditor needs to understand, first of all, the requirements of the applicable financial reporting framework with respect to the accounting estimates. Then, what are the methods of identification of the events which result in making accounting estimates that need to be recognized in the financial statement? Third, how does the management come to know about the changes or come to know about the events wherein the accounting estimate has to be made? So herein these aspects can be considered, like the type of transaction, change in terms of existing transactions, regulatory changes, changes outside the management control. For example, COVID-19, that was one phase wherein a lot of accounting estimate was required to be made by the management. Once the auditor has inquired, then the auditor needs to understand what basis has been used by the management to arrive at making the accounting estimate. So herein the auditor goes through the method, the control environment, what kind of model the management is using. If the management has relied upon external help, what kind of assumptions have been made, what is the nature of change in the accounting estimate from prior period, and most importantly, assessment of the effect of estimation uncertainty. I've explained this in the upcoming slides. With this, the auditor moves ahead and then understands the effectiveness of the management's prior period estimation process. So before the auditor concludes upon the accounting estimate made in the current period, the auditor needs to understand how was the estimates made in the prior period. The auditor doesn't have to give audit conclusion regarding that, but just for understanding purpose so that he has a base for understanding the estimates made in the current period. Then audit evidence needs to be gathered if there's any re-estimation has been made for the estimate. And if there's any estimation uncertainty, the auditor needs to disclose the same. Now, with all this kind of assessment, the auditor becomes equipped in identification and assessment of risk of material misstatement of the related to the accounting estimates made in the current period. Next, identifying and assessing the risk of material misstatement related to accounting estimates. So in this particular state, the auditor can depend upon certain factors to evaluate the degree of estimation uncertainty. So there could be how much dependence is there upon judgment and assumptions, what all methods have been used for calculating the measurement, the length of the forecast period, what is the quality and source of data which is used for making accounting estimate, and what is the difference between the estimate made in the prior period and estimate made in the current period. With this, the auditor goes ahead and makes the assessment of the risk of material misstatement. So here, when you understand the management's perspective, so that forms the management's point estimate. And basis that, you as an auditor carry out an independent evaluation and make your own estimate. And then you compare the two. The auditor can also seek experts' help wherever the technical requirement is there. And also needs to compare the outcome of the review of the prior period estimate with the current period estimate. So all this helps in auditor to assess the risk of material misstatement related to accounting estimates. Next, response to assess risk. Once the assessment has been made, the auditor needs to understand if the application of correct financial reporting framework related accounting estimate has been made by understanding the entity and its environment. There is consistency in the method of the application of accounting estimate. And what is the change? Yeah, what was the need to change the method in accounting estimate or basis of accounting estimate when you compare the prior period estimate to current period estimate? It should not be arbitrary. So this is how the auditor concludes if the assessment can highlight the risk of material misstatement or not. Moving further, coming to recognition and measurement criteria. The auditor needs to understand what recognition and measurement criteria has been adopted by the management. If it has been recognized, then the auditor needs to establish if it was as per the applicable financial reporting framework. If it was not being recognized, then the auditor needs to ensure that the management makes this disclosure in the notes to accounts. Similarly, for measurement basis, the auditor needs to establish if the management has done it as per the applicable financial reporting framework. Evaluation of reasonableness of the accounting estimates and determining misstatements. Now, how does the misstatement in accounting estimates arise when there's difference between auditor point estimate and management point estimate? Remember, I've already explained this. The basis, the criteria, they are different. Then the management's points estimate lies outside the auditor's range. Arbitrary change in accounting estimate or the method from the prior period. Disclosures related to accounting estimates that the management needs to make. So the auditor needs to collect audit evidence regarding disclosure. The management needs to disclose the assumptions that have used to make the accounting estimates, the method of estimation, basis for selection of method of estimation, effect of the changes, sources, and range of possible outcomes. Basis on the basis of these disclosure, the auditor needs to establish if they're adequate or not. And depending upon that, the auditor needs to conclude if the disclosure of accounting estimates, do they have any significant risk? And what are the circumstances which can result into estimation uncertainty? Basis this, as explained earlier, the auditor will seek written representation and documentation from the management and those charged with governance. So basically, if I just go through this, it talks about the recognition criteria, disclosure has been made by applicable financial reporting framework or not, what basis has been used, and what was the basis of the auditor's conclusion to conclude if the accounting estimate was reasonable or not. With this, we come to end of the deliberation. Thank you so much for patient hearing. Over to you, Lalit.
Thank you, Asta, for an insightful and very, relevant and knowledgeable session. So thank you very much. So now, let us turn our attention to the participants of the webinar who have eagerly submitted certain questions to our esteemed speakers. So it is my pleasure to pose the questions to our esteemed speakers who will undoubtedly shed light on those important topics and questions. So, sir, Mohan, sir, first question is for you. It's with respect to SA 505, external confirmation. Like a debtor confirmation reply is received from Gmail, a public domain. So whether it can be considered as a relevant evidence for audit?
Yeah, this is a very good question. And so, first of all, we need to see, when we are deciding to obtain confirmation through electronic media. So we need to first understand what is the source of that confirmation, mail ID we have taken, whether this is correct, who has given this, and how this has been verified. If it is actually Gmail can be authenticated, but whether this is as per the authenticated source, that is important to understand. Whether why the company will have a Gmail account. Generally, all company has their own domain ID, and that domain ID should be for that particular company. I mean, we have to be careful. We have to understand from whom we are taking confirmation. If it is a wrong mail ID, you will get wrong response. Whether you can rely on wrong response, you need to perform additional procedure on the validity of that address. Yeah.
Okay. Okay, sir. Second question is with respect to SA 520. It is with respect to revenue audit. So is it sufficient to perform substantive analytical procedure on revenue account, or TOD, test of detail, are also supposed to be performed by an auditor?
So generally, for substantive analytical procedure alone cannot be a sufficient evidence anywhere. And for revenue, especially because this is high risk area, fraud risk area, we need to have procedures. We need to perform procedure with respect to controls. We need to perform test of details, and in anywhere practical sense, it is not acceptable just only performing analytical procedure to get comfort on revenue.
Thank you, sir. Sir, next question is with respect to SA 510. So an audit firm ABC was an auditor of company XYZ, but due to Companies Act rotation provisions, the firm was rotated out. Now the cooling off period of 5 years is being passed. The same firm is appointed again. So question is whether SA 510 attracted here, whether the auditor is supposed to perform initial audit procedure.
Yeah, it is correct. So initial audit procedure need to be performed in this case also, because in cooling off period, there might be some procedure, some transaction has taken place, or there will be some changes already. Opening balance will also change. So we need to perform those procedure as prescribed in SA 510 to get comfort on opening balances.
Okay, sir. Thank you, sir. Now, there are questions for Asta Gupta. So, ma'am, like we receive a question while doing audit of revenue, there are only 12 entries, 12 invoices. So, what should be the best approach? Like whether audit sampling should be applied, or auditor has to do, complete testing. What is the best approach here?
So I think the number of invoices is not the only criteria to establish the audit sample. It also depends on the value of transactions and the nature of transaction that is taking place, and the kind of resources you have in terms of time and the audit team. So depending on that, you can draw a sample, and if you have there is no paucity of time and it can be quickly done, then you can refer to all the 12 invoices. Transaction value is very low, then that can be left out of the sample also. So the nature of transaction value plays a very important role in determination of the audit sample.
Okay. Okay, thank you, ma'am. Next question is with respect to SA 540. So auditor has received, impairment testing projections. Certain projections management has provided. So in those projections, management has considered revenue growth rate of 50% for the next 5 years. But similar industry, like other companies in the similar industry, are growing at a rate of 15%. So, as an auditor, what should be the procedure they need to perform?
Okay, so this is a classic case of, I had mentioned about the management point of estimate and the auditor point of estimate. So the auditor has done his point of estimation in terms of analyzing the market data. Because, in the industry, there is a certain rate of growth that should have been adopted by the company in arriving at the conclusion. So as I've mentioned in my slide, and you can also refer to the work checklist, the auditor needs to inquire from the management that there is an already trend existing in the market, and still you've opted for a higher rate of projection. So why is that basis taken? And if there's any external help that has been sought by the management to arrive that particular estimate, so the auditor can inquire from that particular entity. It could be an expert, it could be an in-house projector. And still, if the auditor, in his opinion, feels that the management is not able to convince as to why this rate has been selected, then the auditor can go ahead and, depending upon the severity, how much transaction value is being impacted, from the point of view of test of control or test of details, the auditor can modify the report.
Okay, ma'am. Next question is with respect to SA 560. Auditor is doing audit of March 31st, 23, and management has followed going concern approach. But in the month of July, they have passed a resolution in board meeting, that they will be liquidating the company. So what are the revocation and how auditor should look this particular transaction?
So since this particular event and condition has taken place after the date of financial statements, but before conclusion of the audit report, so it is a subsequent event, yes. So I think here SA 560 and 570 both will be attracted, because here the auditor will also consider the going concern assumption if the entity makes that assumption. So if that is not being done, the entity clearly says, listen, we have liquidated our entity. So the first auditor needs to establish if the financial statements are made on an alternative basis, that is on liquidation basis, but not going concern basis. So here the provisions of SA 570 will be attracted and the checks will be carried out accordingly. Second, coming to 560, because you've talked about the resolution and this also acts as an audit evidence, the auditor will inquire from the management if the effect of the same has been taken in the financial statements and adjustments have been made. So both need to be considered, not only 560, but 560 and 570 both.
Thank you, ma'am. Next question is with respect to SA 580. Client has taken loan from group company, but client does not have any kind of supporting available, or they might not be, able to give to the auditor. So client is also well educated, and they have asked the auditor that we also have read 580. We can give you written representation. So is written representation a substitute to any other audit procedure?
So like I had said while explaining the checklist related to SA 580, written confirmation is important, but it is not a conclusive audit evidence. Now, कहने को तो मैं भी लिख दूँ कि मैंने तो loan दिया है, but that doesn't mean कि loan दिया है, right? So that is where you as an auditor need to outsmart the client. So you can take like an external confirmation, like Mohan sir has explained, from the group company. You can take a copy of account in their books and understand if actually that amount reflects or not. You can send a mail to them. And if you feel there's something fishy, then you can always give that disclosure in the emphasis of matter and other matter paragraph. The idea is to cover ourselves that we have done our job properly. The rest, the management needs to look after. So I don't agree with this, that the written confirmation on that basis, the auditor concludes that everything is good.
Yeah, in a nutshell, we can say that written representation is not a substitute to any audit procedure.
Yes,
it's just an additional evidence.
Correct.
Okay. So next question is with respect to section SA 570. The company is a loss making and the net worth is eroded, and the company is receiving support letter from its group company, from its parent company. So now the support letter the company has given from the period end, from the year end. Let's suppose they are doing audit for 31st March 23. So they have received a support letter for 1 year till 31st March 24. So a question is like support letter should be from 31st March 2023 or it should be from the date of audit report.
Okay, so I'll divide this question into two parts. So first, you had said that the net worth had eroded, the company was making losses. So these are negative financial indicators, which the management obviously has considered. It's a known fact, and the auditor also needs to consider while assessing the going concern assumption. So that we already know it is negative. So that means the going concern assumption is already impacted, and there are events in the form of negative net worth and the losses, which can raise a question on the company's ability to continue as a going concern for the period after for the period of 12 months after 31st March 2023. So that part I've answered. Now coming back to the support letter that has been offered by the group company. Now the support letter has, if it is been offered by the group company for the period 1st April 23 to 31st March 24. Am I right? That's what the question was?
Yes, yes.
So again, you need to understand, I mean, this is auditor judgment and the auditor needs to delve in further by seeking more evidence. If just on the basis of the support letter, the auditor, the entity can continue as a going concern. In fact, if you refer back to my slide deck, I had mentioned instances wherein the auditor can request the management to make the assessment beyond the period of 12 months forming part of SA 570. So this is a classic example that the support letter is only for the period of 12 months. But you know the condition, the financial condition of the company is not good. So in this case, I think the auditor should approach the management and see, listen, 12 months are okay, but how do you intend to continue as a going concern after that also? If the management comes up with some convincing reply and they say, okay, we can take these further actions, so the auditor can give the auditor opinion accordingly. If not, then the auditor can go ahead and give a modified opinion.
Okay, understood. Thank you. Thank you, Asta. Yes, as a professional skepticism, we need to be professional skeptical and we need to consider 12-month period from the date of audit report. Okay, so now I would like to say thank you to our panelists and speakers. Once again, I extend my gratitude to our distinguished speaker.
Sir, I'm also having certain questions.
Sure.
Okay. Yes.
Yes, sir. Sir, one first question is, Madam, can you tell me in case of the change of the management over the control of the entity due to the action of IP appointed by the NNCLT, can we treat it as a going concern for the same?
So this is also an operational indicator which the auditor needs to consider. Change of management is one of the examples that was given in SA 570 as well. Now, again, it depends if the change has management taken place, that means it is an adverse factor. Now, depending upon what, there is a significant condition which can affect the entity's ability to continue as a going concern. If the management has made adequate disclosure to this effect and the management, there is audit evidence in place to ensure that the entity can continue as a going concern in spite of the change of management, then the auditor can proceed and give an unqualified opinion. Other than that, depending if the disclosure is not adequate or it's not in place, then the auditor will move ahead and give a modified opinion.
Can you hear me, madam?
Yeah. Can everyone hear me?
Yes, we can hear you.
Okay. I've already answered, Anilji.
हाँ, वो आपका आवाज नहीं आ रहा था. Now, my second question is, how the small size firms store the electronic form of evidences? How can they maintain privacy of such client data?
Mohanji, I think this question is for you.
Mohanji, this is a question for you.
Okay, sorry. Yeah. So for like a small firm, it means that the possibility they are not having any software, accounting software, auditing software. So in that case, they can convert into PDF and then keep in the folders of normal folders files, and those can be retained for future references.
I would like to add here from my practical experience because we usually audit SMEs. I think both hard copy and soft copy should be maintained. I know hard copy is a lot of hassle and it's an old technique, but sometimes, in this time of so much data leakage and cyber frauds and all, you can use Google Drive and, other documents, but hard copy wherever relevant should also be in place to substantiate this requirement.
Agree. Yeah.
Yes, madam. Madam, this is a question for audit sampling. How to
Mhm.
audit sampling in case of very high transactions, high value transactions with reliable evidence?
I think this is a very generic question. So audit sampling depends from case to case. You can attach the probability, you can do ABC analysis, you can use Pareto analysis. There are a lot of methodologies defined to come at a, there is no perfect sample, to be honest. It depends from auditor to auditor, client to client, what is the value of transaction. So this comes with experience. You can use Excel techniques to Excel, Excel formulas to derive at a particular formula and then select samples for vouching and other, carrying out other audit procedures.
This next question is for both the speakers. If the auditee does not cooperate in providing the required information in the documents, what should be the auditor do accept the qualifying this report? Will it amount to the negligence of the duty?
Mohanji, please.
Yeah. So we have to have the information. So in audit report also, we have to say whether we have sought and obtained all the required information. This is fundamental to our audit report. In case client is not providing any information, then we need to first understand why he is not providing, what is the reason, then escalate to those charged with governance, right? And then still those are not resolved, then we need to see why, what is the basis of providing our opinion, or why we should not withdraw from the engagement. We need to assess all these steps just to see the reason of not getting information.
I totally agree with Mohanji. In fact, the basis of getting the audit evidence is the information and documentation that the client needs to provide. Again, depending upon what will be the effect of not getting that particular information, what will be the severity, if it will have an impact on material misstatement or not. If the sufficient and appropriate audit evidence is not in place, the auditor can go ahead and give disclaimer of opinion. मेरे पास अगर basis ही नहीं होगा तो मैं audit कैसे करूँगी? So simple.
Yes. Madam, in case of SA 570 revised, how the going concern concept would get affected on consolidated accounts, particularly when there are overseas subsidiaries for an Indian holding company, being the listed company?
Okay. I think in this particular case, whatever application you are making to the Indian holding company, you need to analyze what all the same criteria of financial operator indicators on the overseas companies also. You can inquire from the management, because in any case at time of consolidation, you will have the access to the financial information of these overseas organizations. So you can consult with the management and determine the operational and financial indicators and carry out the audit procedures as mentioned in SA 570.
Last question for today. When the auditor takes help of an independent expert, who will bear the cost of the professional charges of the expert? And what happens if the management refuses to pay for the professional charges of the experts?
I think that should be like out-of-pocket expenses, and you can, anyway increase the audit fee from next year if he refuses to pay for the audit charges. So I think this is very practical. That's what we do. Mohanji, if you have any other view on this?
Yeah.
Mohan sir, you're
you're right, absolutely right. Because when we are appointing somebody, that means we are appointing to perform our audit procedure, which we are able to perform.
Correct.
So in that case, in case we are hiring somebody, then it has to be practically to be part of our fee only, which has to be charged to client in total basis. If it is a good client, compensate to you, that's fine. Otherwise, in most situations, it is part of our procedure only.
Right.
So thank you so much. We now come to an end. Thank you so much, both the learned speaker and Lalit Agarwal ji, on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India. I extend our heartiest thanks towards CA Mohan Soni ji, CA Asta Gupta ji, CA Lalit Agarwal ji for sparing their valuable time and enlighten all of us on various audit procedures as well as the checklist for the audit evidence series SA 500, 501, 505, 510, 520, 30, 40, 50, 60, 70 revised and 580. So once again, thank you so much. More than 1,300 participants are still live. So thank you so much on behalf of AASB of ICI. Thank you so much, Lalit ji.
Thank you.
So once
Thank you so
again, I extend my heartfelt gratitude to our distinguished speaker, our participants, and our chairman, AASB ICICA, Dr. Sanjeev Kumar Singhal and Vice Chairman, CA Vishal Doshi for their support in making this webinar a reality. So thank you very much.
Thank
Thank
you.
you. Thank you.
Thank you.
Thank you.
Thank you. Thank you, everyone. Thank you, everyone.
Thank you. Thank you.